Help! Bitcoin is dumping. Why? Has BlackRock trapped us? Is the SEC suing someone? Is Bitcoin banned? Triple top in the chart. I've seen so many theories on my feed today. The leading one centered around slight outflows being back in the ETFs. Guys, it's much simpler. Two reasons. Number one, someone was selling here at 70,800. Someone selling is a good place to start if you want to understand why the markets are going down. And we identified it in the last Friday TA report that I wrote here on Good Friday. The only slight concern is that during the past 3 days there has been obvious sell pressure happening every time price crosses 70,800 in size sufficient to push price back down. There is no way of knowing the size of the seller, meaning if they are almost exhausted or if they have like gigantic supply left. And with this, of course, I mean more than the buy pressure. This is definitely the level to watch on short-term basis. If this level breaks and closes above those wicks, all signs point towards further continuation. And 70,800 is this line that I've drawn here. So this happened 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times that every time price came above this level, boom, someone put a sell order and price went down into the range again. And while price technically closed there at 1 AM, price was down to 70,800 again. So this pattern that you see here is a range or a rectangle which can break in either direction. This time it broke on the downside, price immediately hit the target and continued down. I did not take any short positions or anything here because it's brave to the point of being dumb to try to short Bitcoin in an uptrend. Not for me. We don't need to speculate why that person was selling, but the fact that they were selling was pretty clear in the chart. Perhaps they had a hunch about what I will say next, because there is a second factor also, explaining this to many shocking dump. If we overlay something here, you will see it yourself. Now the orange line represents the inverse of the yields. Specifically the US 2-year yield. And during many periods of Bitcoin's life, this has been very helpful, because the inverse of the yields and Bitcoin's movements have been heavily correlated during quite many periods of Bitcoin's life. If you're a fan of the channel, you know how many times I've said that over the past 2 or so years. But it's not always the case, because of course many other factors influence something like Bitcoin's price. And the leading factor during 2024 have been the ETF inflows, not the yields. So during the past couple of months it has been less useful, because the effect from the yield change has been dwarfed by the effect from the ETF inflows. But now it looks like we are seeing it again. And by the way, I know all the arguments against why this shouldn't work, but fact is that an infinite number of times almost during the past 2 years, this has worked. It has been one of the most useful tools. And the reason it's been so useful is that the move in the yields have frequently preceded the move in Bitcoin. So here we actually get the clue ahead of time. So the orange line going down, the inverse of the yield, means that the actual yield is going up. So second week of March, we had a big pump in the yield, meaning the inverse drops, which was followed by a drop in Bitcoin. Similarly, now we've had another big pump in yields, which was followed by a big dump in Bitcoin. If you look at the actual yields, you can see here why people are concerned. If this was a trading chart, you can see that this is like an Adam and Eve pattern, moments from breakout. And of course, if this pumps higher, the inverse goes lower, and chances for further dumpage in Bitcoin and other speculative markets like stocks. So I think this is one of the best clues we have here to what is next. If we now focus back on the Bitcoin chart as such, what could be going on here? It becomes really speculative. Of course, could be that the symmetrical triangle is in development. I saw several people posted that, and they drew it something like this, but that's actually not correct. The first touch should be the high here, and then the second touch this one, and that means that it becomes very speculative what is the slope of the lower boundary. Of course, I could draw it here, but we have no idea if it's going to turn here or continue further down. And then if it becomes a symmetrical triangle, this is the first touch, number 2, number 3, and if it actually bounces on the 4th touch, be it here or further down that we don't know, then one of two things can happen if this is to develop into a symmetrical triangle. Either it breaks on the upside, and then this becomes a continuation symmetrical triangle with 4 touches, or it turns on this trend line for a 5th bounce and breaks on the downside. Then this becomes a reversal symmetrical triangle. Which of those two cases are going to develop, if any of them? Because remember that if this continues down here, this isn't a symmetrical triangle in the first place, because then there is no 4th turning point. And we don't trade patterns that are not complete and that have not confirmed. Instead, I think there's a much better way to approach this to many very scary candle today. I mean, it's -7%, it's a lot. And that is with scenarios, position sizing and reacting to events. As you recall, I was a little disappointed here on the 19th, 20th of March. I was hoping we would get a little deeper dip, maybe down here to the 58k area to retest this trend line. That didn't happen. Instead, we got an immediate reversal candle. The reason I felt like that is because everything is looking great. Larsen line is gold. The dominating chart pattern is this upward sloping channel, which broke up. Fantastic. Support levels are holding no matter how we draw them. So I wish for dips, hoping that I can buy more. Even though I have those long-term great entries, I have new money I want to deploy. So if we get an actionable support bounce somewhere, I'm going to take advantage of it. The lower the better. Or if we get a well-defined continuation pattern, I'll take advantage of that too. But that would be on higher prices. So the more dump the better. While Larsen line is gold and the dominating chart patterns are bullish. We should find support here. We have volume nodes point of control here, little over 50k. Perhaps that is dreaming too wild. But if it happens, I'm gonna take advantage of it. And if it doesn't happen, if these never hit, well, ladies and gentlemen, that means that we're continuing up. And then we also make money. But Larsson, what about that money that you couldn't deploy there then? Did you lose money by not buying here? No, I didn't. Then I can use that money for other opportunities when they present themselves. Let's take a quick look at a couple of altcoin charts. I pointed out this pennant or wedge or flag. It didn't matter how we drew it. It was a bullish breakout regardless, which is still holding right now. ETH BTC on the other hand. Sigh. ETH BTC has been in this ranging price action for half a year now. As a recap, in a range there are no trends. So don't try to trend this inside the range. We need a range breakout that doesn't immediately revert for trends to resume again. And trends can be uptrend and downtrends. And in crypto, once prices are trending, those trends tend to be pretty sticky. And that's really the opportunity. So of course, me and many others are trying to understand, is this breaking support here or is it another one of these seemingly never-ending constant fake outs? I don't know yet. I haven't taken any actions here, but this doesn't look great. I discussed in this video the different scenarios for ETH, and I think you really have to open your mind to both those possibilities. And as I mentioned there, I think base is the biggest hope of Ethereum at this time, but is it enough to turn the price of the ETH coin? I don't know. If you look at SOL versus ETH, there are no signs of this parabola breaking. Definitely worry more about the meme coins at this point. To take one example that I covered before, this BODEN, remember that I said that this parabola was intact the last time I mentioned it, and it did indeed continue quite a bit further up. But then the parabola actually broke. You see it here. And now if we zoom in a little bit, maybe I remove this one so you see it clearer. Now we start getting head and shoulders pattern in many of these meme coins. Left shoulder, head, right shoulder, breakdown, retest. So parabola break, head and shoulder pattern, that's quite a different situation from an intact parabola and an undeniable uptrend. I'm not fudding, I'm not saying it's over. This could very well be support and bounce and continuation here. I'm just pointing out chart patterns, guys. These are the times in the markets where you will get slaughtered unless you have a process and a methodology. Now, for some period, we've been in the phase of the market where everyone's been a genius and there's no need for any stupid process. But I can assure you that quite a lot of people gave quite a lot of profits back to the market today. Because people who have done well in the markets recently, who have made money, they went in now with bigger positions, feeling, why didn't I buy with more money? I should have bought with more money. Let me do it now instead. Then they go in and boom, price minus 25% in 24 hours. And they end up losing more money than they made during the uptrend. And this is why people who actually made the right entries at the right time in the market still end up losing money in the end. Because remember, this is just a tiny correction. We're just at prices we were at 8 days ago. Still, people look like someone has died, and this is why. It's possible to lose a lot of money very fast. So I think that today a lot of more people will appreciate position sizing, stop loss, and a more careful approach. I'm never the most popular during the biggest frenzy of the bull market, but at days like this, usually people start appreciating having a methodology to fall back on, to not get overrun by emotions. If you haven't already, I think you should go to ctolarsson.com and take my course, Get On Lars Online, to have a methodology so that you can welcome corrections in the markets during an uptrend with open arms and excitement. Because this is an opportunity, guys. I hope it goes deeper. If it doesn't, we might get a continuation symmetrical triangle, which is also an opportunity. I'm back in the studio after the Easter break. I have some exciting stuff going on. Don't forget to subscribe. Thank you, tack. CTO Larsson out.